the great conversation brings us to gold. I mean, and here's, we got these miners here for you today, but let's start off with a little bit of an overview of gold and some of the underlying commodities and what they've been doing with real yields. Gold has battled extremely well. Obviously, going back to November of last year, it bottomed out, just below 1,700 one more time, but the rally place in 2000 has been moving gold, and that's happened despite real yields remaining somewhat high, and I think though as those real yields, the difference between the 10-year yield and inflation expectations 10 years out as that expanded, that should be a headwind to gold. That's probably why gold was lower, but what you're seeing the market really extrapolate out now is that all these central banks around the world, including obviously the Fed, hiking rates just steadfastly. They're going to slow growth. They're going to overhike and they're going to slow growth. At some point, they're going to have to pick this pedal, the foot the pedal, and then reverse action. And that's what gold is sniffing out here on this move. Obviously seeing things start to break, like the banking crisis. But not only that, central banks themselves in 2022 purchased 1,136 tons of gold. That's the most gold bought by central banks on record in 2022. And 2023 is off to a great start too. The strongest start in these first 3 months since 2010. And we know what happened, what really started getting gold going in 2010. That was laying the groundwork for that move to 1900. So there is, you got Turkey, China, India, largest buyers of gold. I mean, those countries are continuing to. I don't see a reason for them to stop buying gold. So that's going to underpin price and mindset. Not only that, the production of things like silver are well off the peaks, and we'll cover that within silver. And then the other thing that I watch very closely, if you read my stuff, if you watch my stuff, I always talk about the Chinese yuan and the impact of a weakening yuan on the metals. When it's lower, it can really drag the metals lower. And then when the yuan strengthens against the dollar, it's a tailwind to the metals. And we look at China as a terrific tailwind here as we get into the later part of this year. The reopening really hasn't begun. And you get the reopening news to start the year. That was a big move for copper early part of the year, but the reopening really hasn't begun yet. The general public reasserting themselves into the society again after 2 to 3 years of lockdowns. I mean, it's going to have a big impact. New loans data has, as of last week, was the second highest on record behind January. The Chinese regulators as well are going to be a tailwind to promoting growth. So China consumes 50% of the world's copper, and that I think is important to know. In watching China and watching these metals and trading these metals. So that's a great. I don't want to steal the whole show here for you, Jannis. Why don't you hop in? What's your take on this?
I would echo all these points, and just to follow on the China tailwind here, that could really kick in here in the back half of this year. I mean, this has always been a question of we first saw the Chinese tech crackdowns with the CCP getting more involved. Then, of course, you see business confidence that fell out of bed. With the lockdowns, consumer confidence fell out of bed with it. And right now, we're really coming out of this 2.5-3 year period where the Chinese consumers coming back. You still see a lot of news articles that a lot of consumers are still somewhat doubtful about the extent to which they will be allowed to return to normalcy. But eventually, as the Chinese consumer has saved tremendous amounts of savings here over the course of the last couple of years, you will see that demand come back in. And most importantly, the Chinese real estate sector has really been the growth engine for the economy and therefore the world's copper consumption. And so that will be key to watch. We saw the Evergrande instance where that real estate developer basically went out of business. I think their bonds are trading at somewhere near 70 cents on the dollar right now. But stabilization in that space is key, so you can see consumer confidence return, because you have to remember that a lot of Chinese have all their savings invested in real estate. So if that doesn't stabilize, then you will not see consumer confidence returns. But right now we're seeing that, and as a result, we saw Chinese retail sales rising 10.6% in March. You also saw industrial production rise 3.9% in March with it. And you did see, after, I think, 20 consecutive declines in Chinese home prices, you did see an increase in home prices on a month-to-month basis in February, but also March by 0.5%. So we are watching that real closely, and watching along with that consumption trend, we need to watch the supply side and the fact that the world's largest copper producer, Chile, is producing 14% below the 5 quarterly average on their own copper production. You did see with the Chilean government, the new Chilean government under Boric, who came in and then proposed a new constitution that would have been extremely bad for copper production. And I think you see some of that trend, although the constitution itself did not get through last year, but you still see that the Chilean government is rejecting different iron mine projects. And as a result, the public copper miners are not nearly as confident as maybe they once were. You also see that a lot of the permits only last until 2030. And as we know, if from initiation of a project until you get to production, that lasts somewhere in the range from 10 to 20 years. So if you only have that permit until 2030, of course, you will not commit a lot of capital. So watching that Chilean production rather closely, also watching Peruvian production, and along with that, really the Congo has been the only region that has seen drastic production increases by about 120% up today from 2014 to 2017 levels.
Bill Baruch is the founder and CEO of Blue Line Capital. All opinions expressed by Bill and podcast guests are solely their own opinions and are not intended to provide specific advice or recommendations. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. Understand your financial condition before investing. Blue Line Capital, its staff, or its clients may maintain positions in the securities discussed in this podcast.